personal income tax reforms.
For millions of Indians, this budget boils down to one simple question.
इस बार आम आदमी को टैक्स में कुछ राहत की उम्मीद है?
No income tax payable up to
You pay zero tax up to 12 lakhs of income. Is this even true? Nirmala Sitharaman talks about this and everyone's talking about it on the internet, but there's a problem here. If you look at the slabs, it shows 5%, 10% up to 12 lakh rupees. So why is everyone saying it's zero? And how much money will you actually save when you get your next credit in the new financial year? We'll start with this. I have an actual calculator you can use. And after this, we'll talk about the other things in the budget. So let's begin with the salary part. So this Excel sheet is divided into two parts. On the left, we have 2024 and on the right, we have 2025. And the point is to understand how much tax you're going to save. So let's start with 12 lakh rupees annual income, and then I'll change this number to show when exactly will you pay tax. So over here, I'll change the annual income to 12 lakhs on both sides. Remember, only the green can be changed and everything else calculates on its own. So now, will you pay tax on 12 lakh rupees? Before we get there, you have to remove the exemptions, which is HRA, children's education allowance, etc. As you might know, this is no longer allowed. You can't do these exemptions anymore. Then you have reimbursements. This could be mobile bills, meal coupons, internet that your company reimburses you. This is obviously deductible if you have the proof. I'll assume this is zero because everyone's company has different policies. The net salary obviously now is 12 lakh rupees. Nothing's changed last year or this year so far. Then comes standard deduction. Just like last year, you will remove 75,000 standard. No matter what your salary is, from your net salary, you'll remove 75,000 and you come to a number which is your taxable income. Remember all those savings that you used to do, 80C, 80CCD, etc. are no longer applicable. So you can't do any of those investments to save tax anymore. So we have a taxable income of 11.25 lakhs in both cases now. Now let's see how it's going to get calculated. After we apply the tax slabs, in the previous year, you would have paid 71,500 rupees. But in 2025, the total tax payable will calculate at 54,600. However, you will not pay tax on it. Basically, if you're earning 12.75 lakhs, up to that figure, you will pay zero tax. This is called a rebate, and through that rebate, this 54,600 will not be paid. In fact, if I change this 12 lakh annual income to 12 lakh 75,000, the sheet will still show 62,400, but because of the rebate, your income tax will be zero. Now let's talk about what's getting cheaper and what's getting expensive. So we have cancer and life-saving drugs, which are getting cheaper because of a tax exempt. We have lithium-ion batteries, which are getting cheaper, which means if you're buying a phone or an electric car, it seems like those costs, since they're going down, it should cost you less if the manufacturer is nice, obviously. Then we have LED TVs, which are getting cheaper. So I guess more people will be buying LED. It's also good for the environment. And you have leather products and critical minerals will also get cheaper. On the expensive side, like I said, we have flat screen TVs getting cheaper, knitted fabrics getting costlier, and any plastic product is gonna get more expensive. So far, rental income's TDS threshold was 2.4 lakh rupees. This has now been changed to 6 lakh rupees per annum. So this is also a nice positive. Then comes healthcare and remittances. You'll be surprised to know India is the cancer capital of the world. It's a sad reality that 14 lakh cases come out of India every single year. And this is a public health emergency. So a few things have been done. One, cancer and other life-saving drugs ka cost has been reduced because of a tax exempt in the basic custom duty. On the other side, we have 10,000 more seats in medical education opened up so we can train more medical professionals. As you might know, India also has a shortage of healthcare workers. The government is basically trying to make cancer care more affordable and reduce the number of cancer patients in the country. However, a lot of this really depends on the delivery mechanism. So, how does the drug actually reach the remotest area in the country? We don't have excellent infrastructure yet for that delivery system. And to further support the manufacturing of these drugs, the government has obviously made it better for drug manufacturers. The finance minister has also announced daycare centers for cancer patients in all district hospitals over the next 3 years. So what's going to happen after this announcement? Two things. First, think of the government like you handle your credit card. They have to manage their expenditure and how much they're earning. They're earning from taxes, direct, like your income tax, and indirect, from like GST and other taxes. They have to make sure that this is higher than what they're spending. Now, India is actually spending more than it's earning. The government is overspending by 4.8%, which means it's in minus or a deficit. This is called a fiscal deficit. And the government is trying to reduce this number from minus 4.8% to minus 4.4%. But if it's actually foregone 1 lakh crores in earning opportunity by increasing the income tax slab to 12 lakhs plus, then how does this actually reduce? Well, their bet is on long-term consumption. Let me explain. When people are paying less tax, they have more cash in hand. And when they have more cash in hand, they will spend. So you might go buy a new washing machine. You might take an Uber to get there. You might speak to someone and you might get it financed. You might pay interest on it. Someone might deliver it. You might pay him a delivery charge. After that, you might have to buy new things to clean your clothes, etc., etc. Every single purchase has a multiplier effect across the economy. Basically, it stimulates the economy and pushes consumption, which means, hopefully, over the long term, the GDP also expands. And when that happens, as a percentage, the fiscal deficit automatically looks lesser because consumption or the GDP has increased. This is great because some people will also use that extra money in hand and invest in the markets. And hopefully the markets will go up. And when I say markets, I don't just mean stock markets. I mean every market out there. However, the problem is that this won't happen in the next few months. It'll take some time. But when it happens, we might look at a nicer India with a higher GDP.